Good morning. We're going to talk about stock prices this morning, and whether the issues in the economy are fully reflected in stock prices, whether we're at the bottom. I know a lot of you may have been investing for less than 5 years, and based on that, you haven't seen a 2008 market, you haven't seen a 2000 market, you haven't seen a 1976 market, and seen how that happens and what the sentiment looks like in those situations. And so I wanted to show you some things that I saw from kind of a longer term perspective, and maybe you can use that to actually make some money, because right now I don't think the biggest opportunities are in real estate in the next year. I mean, they might be in crypto, but that's really a very volatile space, so small percent of what you have anyway. But I think your real opportunity is in stocks, long term, and balancing initially your cash compared to your portfolio. You should have 25% in cash and be raising that position now, maybe to 30%. Sell stuff, get a second job, whatever. But let me show you what I can see. And the first stock we're going to look at is Walmart. And so if you look at Walmart on a 5-year history, they had some inflation hits, which we all expected them to have because we all knew about inflation. They had inflation hits, and the market was surprised by the inflation hits. Now, why is the market surprised by inflation hitting this company? Well, Walmart doesn't usually have a lot of things happening to it with inflation, but right now it really reflects overall the whole U.S. market because they do such a large percent of the whole sales. And so, is it fully priced in everything to Walmart stock? Well, the reason I would say no is for one single reason, or two reasons, okay? And we'll talk about the second reason later, but the first reason I will give you right here is the price to earnings ratio is still 27.6. Now, at fully baked in, we're going to grow average now in the economy. We're no longer in a boom economy or even in a recession. This is going to be down maybe around low 20s or high teens, okay? And this is going to be over 2. That's where I think a normal range for Walmart is going to be. Right now it still has a little bit of a bump from expectations being great. Now, a second stop we'll look at is Home Depot. Now, Home Depot is really a play on, people upgrading their houses, building houses, things like that. And so you see they've taken a hit here, 407, which is very high expectations, down to 300. I bought some Home Depot down at 315 or something like that. I was looking for it for a while because it's done so well over time. Below 20 price to earnings ratio, 2.5% dividend. And so there will be a spike down in Home Depot, but largely it has a reasonable expectation built into what it's going to do. And based on that, I think you'll be able to buy it a little bit lower sometimes, but I think this is the reasonable valuation for this particular stock. Microsoft, you look at the 5-year on Microsoft, up here is the peak. They have a little bit priced in, but really they have not taken a big hit. People are thinking Microsoft, it's a great company to be in a recession because it's software and things like that. Well, maybe it is, but I would say this will take a hit when the market takes a hit. Now, the last one I will show you, and this is kind of more telling, is VIG, which is a broad market ETF. Now, what you'll see is from the peak here down to where we are today, even a bump, is very little adjustment. Okay? So the question would be, does this adjust for us being in a recession? Is this adjusted for us having high interest rates? Is this adjusted for lower go-forward growth? I would say it has not been adjusted. So the broad market is still expecting this to be a temporary thing. Inflation drops down, interest rates remain reasonable, and growth kicks back off. Now that may happen, but I think from the standpoint of stock investing, that will most likely happen after you see more of X company goes bankrupt because there's too much debt and the rate's too high on the debt. Y company is affected by that, and when that happens, people will then price this emotion into the market, and the emotion being priced in the market will cause a spike, and that's what I'm kind of looking for. And from a money standpoint, I think you should be at 25 at least or higher, and be ready to deploy 15 to 20% of your total investment money during that spike, right? And you may not hit the bottom, but when you see the emotion occurring in the market, you see Jim Cramer freaking out on the news, freaking out, people at work freaking out, then you know that emotion is priced in. And what you're looking for is to buy every once in a while when the emotion is priced in. Now, you're still getting a dollar cost average. I'm still buying Walmart stock every couple weeks, right? And so I'm still doing that. I'm not trying to time the market wholly, but I do raise my cash position based on what I expect from an emotional standpoint in the market. Right now, there is a really sentiment that things are not going to be as bad as they probably will be, and when that goes away, it will be priced in at least for a day, which will give you maybe a bump of $15 or something in this. So instead of buying at 140 something, maybe you can buy at 132 or something. And so that can make a significant difference over time if you have that cash position built up. And so watch for that. I mean, you'll see that, like you did back here. I mean, I bought probably right here, and over a long term, you're going to look awesome. Did I buy at the bottom? Nope. I bought about right here, and that was good enough. I mean, you could wait for the bottom, but you're probably going to miss it. I just wait for the value to occur. So maybe 10, 15%, you'll see that spike, and I'm going to buy at that point. I can't advise you because I'm an investment advisor, but that's what I'm going to do with my money. And I just wanted to share that with you today to tell you where I felt the opportunity was. I'll talk to you later. Bye.